the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Data from the Election Commission suggests a 63% turnout in the fourth phase of the Lok Sabha elections. Mumbai's voter turnout was the best in 3 decades. Reliance Mutual Fund has decided to mark down its exposure to Reliance Home Finance and Reliance Commercial Finance after rating agencies downgraded their schemes. Yes Bank reported a surprise net loss of over 1,500 crore rupees in the March quarter as the lender under its new management chose to recognize stress upfront and take corrective action. On the other hand, Kotak Mahindra Bank is expected to report a stable quarter with asset quality likely to remain stable. And Asian markets are off to a slightly negative start. That's ahead of data that will soon be released by China. I'm talking about the PMI data there. Let's talk about the US markets now. It was a volatile day of trade for the US markets. The S&P 500 and the Nasdaq made new intraday highs, but ended below those levels. Investors are now awaiting cues from the Federal Reserve policy meet that takes place, the result of which rather will be announced on Wednesday, that's tomorrow. Renita Young of Bloomberg News brings you this report.
U.S. markets are rising above record highs on Monday, ahead of a week packed with data that should give more clues on global economic strength, and during a week in which the U.S. Federal Reserve is supposed to meet. Now, investors are looking to see if the economy and the most recent batch of corporate earnings will continue to support the equities bull run. This week, we also have MGM Resorts, Wynn Resorts, and Eli Lilly, among other companies. Meanwhile, Tesla's finished goods inventory figure topped $2 billion for the first time, and this comes as the Model 3 sedan begins overseas deliveries. And Spotify's premium subscribers reached 100 million for the first time. That was the high end of the range, and AMC is rising as concessions top records during the Avengers Endgame premiere weekend. Meanwhile, the benchmark U.S. Treasury yields climbing after a large 5-year block sale, and crude oil rebounding in a volatile session amid uncertainties over the impact of coming disruptions in Iranian oil. And the U.S. consumer spending figure rebounded in March. This comes as the Fed's preferred underlying inflation gauge eases to a 3-year low. And the U.S. Federal Reserve, by the way, will meet on Wednesday, and the Fed policymakers are expected to keep rates the same. And that's a look at your Monday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's talk about oil prices. They've fallen from their highest level in 2019 after U.S. President Donald Trump's tweet of having spoken to Saudi Arabia on increasing the supply of oil. Remember, all of this is necessary because the U.S. administration has refused an extension of waivers that were granted to certain countries importing crude from Iran, and that caused concerns with regard to the supply of oil. And now, how are traders looking at the commodity right now, considering the kind of volatility that has been seen in recent time? Listen in to Mark Newton of Newton Advisors.
Pretty interesting move in oil volatility when you look at implied volatility and this gradual rounding bottom. And you've seen a real breakout in oil volatility for the first time in some time with regards to crude volatility and implied volatility of the options. So I think last week's move is pretty negative with crude oil. And if anything, that suggests that it should be the time to consider, selling into crude at this seasonal time when oil typically starts to peak out. So
this supports your bearish view on oil because you have provided us with a chart in the Bloomberg that really shows, trend lines not to show the trend. Right. You can eyeball that, but it's to show when it reverses. And this looks like it's on the cusp of reversing. Yeah, this is the first time we've seen a move of this magnitude in the last couple. Last week had a huge reversal back from highs and gotten down to right down near 63 from the upper 60s. So this breaks the entire trend line going back since December. So we've had a 40% rally in crude since December. And interesting, they were coming into this seasonal time, and oil typically can peak out. And if anything, it makes sense to consider, buying puts as a way to potentially profit on a move down in crude over the next few months.
So in general, it's been something that's really right to fade this move after the big move and the start of some slowing.
Well, before taking a look at how you would trade options on crude oil futures, not everybody knows that you can do that. It's interesting to note that resistance of last year is really kind of matching there too. So there's an additional level of resistance, and that RSI you put in there too suggests that momentum is really waning. So all of this would seem to support your view.
Yeah, near term, you might suggest that 60 might be a temporary floor, but really it's the momentum that's had a big shift to the downside based on the movement last week. And so I think you couple that with coming into a bearish seasonal time, with a break of a longer-term trend line, most that suggests it might be time to consider betting against crude at this point.
Okay, so now let's take a look at how you would recommend trading oil, this bearish view in oil, through options on oil futures.
So I'm looking at really September 63. I want to go out about 100 days. Volatility has really fallen in half since November, and so you can buy those puts right now for right around 360, which is an applied volatility of about 26. So I find that attractive, given that vol has pulled back and we're starting to see signs of crude really breaking down in recent days. Oil volatility starting to show signs of on the rise. Typically, you want to look to buy options when a volatility gets compressed like this, and now you're seeing the actual price starting to roll over. So it makes sense going out 100 days, between now and September, locking in something for 360 might be a way to consider, betting against crude at this juncture.
All right. Well, they were, of course, talking about West Texas intermediary crude. In India, we look at Brent sweet crude. Brent is, by the way, hovering above $71 to a barrel as of now. But with that, let's talk about the Asian markets. Rosalind Shin of Bloomberg News is joining us live from the Hong Kong studios. Morning, Rosalind. Just trying to figure out how trade is looking this morning. We're back to trade after a break on Monday for the elections. Four phases of the elections done today. How are we looking in Asia this morning, though?
Yes, those very long-running elections over in India. Well, here we are seeing some reaction to some data that came out of China earlier today, the manufacturing and non-manufacturing data for the month of April. Now, interestingly, the numbers actually didn't come in too well. We saw that manufacturing purchases managers index for the month of April was at 50.1 against last month, which was at 50.5, and for the non-manufacturing PMI, that was at 54.3 versus 54.8 for the previous month. So we did see a miss there on both those counts. Now, manufacturing PMI had bounced back over 50 in the month of March, and economists had expected those numbers to roughly stay the same, and they haven't. They have been a bit of a miss in the month of April. So that sort of gives an indication that the economic stabilization that we had seen, that many had thought was coming through a bit more strongly, actually remains fairly fragile. However, let's see how the markets are reacting to that, because we've got the Shanghai Composite making gains of about more than 0.25%. The CSI 300 up by 0.5%. The Chinex up by 0.7%. And they had actually, at least the Shanghai Composite had actually opened lower. So perhaps there may be some buying going on, with some idea that perhaps the government may continue to continue with its stimulus program for the economy. That's a possibility there, which is maybe what is driving the stocks in China. Overall, though, for the rest of the region, it is pretty much a down day. The MSCI Asia Pacific Index losing 0.18% right now. The Nikkei topics are all closed because Japan is closed for a public holiday until next Tuesday. Kospi, though, is losing nearly 1%, weighed down by those Samsung numbers. Samsung Electronics coming in basically saying that net income fell to 4.4 billion in the first quarter, missing estimates which had already been reduced. So not great results there for Samsung. Samsung Electronics right now losing more than 1%. And not only that, Samsung said it sees more weakness in the second quarter in terms of demand for its chips, which are its biggest business, before any recovery in demand. So not a great outlook in the, at least short to medium terms for Samsung there. Over here in Hong Kong, we are also seeing the Hang Seng Index that is losing about 1/3 there, and the Australian S&P ASX 200 also down by about 0.5%. The Aussie dollar weakening a little bit on the back of those numbers out of China, as of course the Chinese yuan. Of course, we saw that weaken as well after the data came out. Back to you.
Rosalind, just very quickly before we go to trade setup here in India, there are a few reports that we're reading and murmurings, so to speak, that China's big rally might just be fizzling a little bit. Is that something that you're looking at based on the kind of data that you're picking up from today as well?
Well, there are questions raised over how much more investors really can boost the stock rally going on in China. We did see it slump last week. The Chinese markets faring pretty poorly. In fact, the worst performance since October last week. So is the energy coming out of that rally is a huge question. And with these now slightly less certain figures in terms of economic data, it may give investors a reason to pause. There may be a little bit of buying going on also ahead of the holiday, because China is on vacation from Wednesday to Friday, May the 1st to the 3rd also. So there may be a little bit of selling going on as investors take a little bit of risk off the table before that break. In the long term, though, yes, we are seeing some investors start to question how much further there is to go in this rally in China.
Thanks so much for that, Rosalind. Appreciate it. Let's turn to India now. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, Agam. How are you looking at it today?
Well, a truncated week, Alex, and we have one more holiday coming up, so we're likely to see some more, sideways movement for the benchmarks. For now, we're seeing a little bit of weakness for the SGX Nifty futures, which are trending lower by around 30 points. As far as trade last Friday is concerned, we did see strength in the Nifty 50 index, but not so much for the mid-cap and the small-cap indices, which clearly underperformed. Not to say that while we are expecting a very sharp reaction in Yes Bank, the Nifty banking indices did well, but Yes Bank is one factor that could, at least bear down on the Nifty Bank Index. But let's move and talk about your ADRs. We have some gains in Infosys, Wipro, Vedanta, Dr. Reddy's. And in the next set, you have, again, not too much movement when it comes to some of those losers too. But when it comes to your institutional flows, FIs did very little on, I would say last Friday, but DIs did buy stock worth around 921 crores. Let's move on and talk about contributors. Then ICICI Bank, Reliance Industries, TCS, the usual suspects providing the bulk of the gains. But moving on to your futures and options space, we are in new expiry, and we're keeping an eye on the May futures. More addition towards longs for the Nifty banking futures should come up on your screen. Another 12% added in open interest towards longs as well. And in terms of your open interest distribution, and this is for this particular week, we are looking at most amount of activity around the 11,700, 11,800 calls and puts, and that is evident in the change in open interest as well. But let's move on and talk about your India VIX, and that's down 6.5%. So it's come off even further, but still about the mark of 20, which means that it continues to remain in dangerous territory. But in terms of your put call ratio, again, largely unchanged at around 1.6. And in terms of some stocks which are in focus, Jet Airways, Piramal Enterprises, and United Breweries all seeing a significant increase in OI. Do we have too much in terms of unwinding? Not that much, but Repco Home Finance, Godrej Industries, and Hexaware, among others. Again, a mixed day of trade, and we're expecting some consolidation today.
All right, thanks so much for that, Agam. Well, let's look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with the death toll from the latest cyclone in Mozambique. It has risen to 38. This is flooding and heavy rain hamper rescue and aid efforts. The government says 160,000 people are at risk, and it's preparing for an outbreak of disease as drinking water becomes contaminated. This is the second cyclone to hit the country in 6 weeks. The first killed more than 600 people, with most of the deaths caused by flooding, which came after the storm. To Boeing now in its latest trouble with the 737 MAX jet. It has mounted a strong defense of the software system linked to 2 fatal crashes involving the jets, but failed to say whether the original anti-stall program was flawed. Its CEO refuses to conclude that the case's software was effective and insists that Boeing followed the appropriate regulators when designing it. The system was activated by incorrect data readings in both of the crashes.
We know that in both accidents, there was a chain of events that occurred. One of the links in that chain was the activation of the MCAS system because of erroneous angle of attack data. That was a common link in both accidents. We know that we can break that link in the chain.
To Indonesia now, the country may change its capital city. This is gridlock and population growth reach the breaking point in Jakarta. It is already home to 30 million people, with traffic congestion estimated at $7 billion a year in lost productivity. Palangkaraya in central Kalimantan province is a frontrunner for the new capital. The government says any move might take 10 years and cost around $30 billion. There's a record number of empty homes in Japan, meanwhile, as builders keep on building despite the population shrinking. A government survey found almost 8.5 million vacant properties, and this includes new builds, rentals, and abandoned homes. That's almost 10% of housing nationwide. Now, Japan's not alone. A 2017 survey in China found around 20% of urban properties to be empty, around 65 million homes. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's switch focus to the big earnings now. And it was quite a big earnings surprise. Yes Bank reported a net loss of over 1,500 crore rupees in the fourth quarter. And that's after the lender chose to recognize stress upfront and initiate corrective action. This was also the bank's first earnings report under the new CEO, Ravneet Gill. Shefali Malik is here to take you through all of the numbers. Shefali, now, you could say that the expectation was to a certain extent that they would front load recognition of bad assets, but then a lot of the analysts and the analyst poll suggests that people were expecting a profit of over 1,000 crore rupees. So big surprise there.
Absolutely. It was a huge kitchen sinking exercise done by the new management. That's the reason why they reported a loss of about 1,506 crore rupees. Asset quality worsened with gross NPAs inching up to 3.22% versus 2.1% on a sequential basis. And the net NPAs as well went up to about 1.86% versus 1.18% on a QoQ basis. Their provisioning was the one which proved to be a drag on the profits, came in at about 3,661 crores versus just about 550 crore rupees on a sequential basis. And a large part of it was contingent provisioning which the bank took for some of the stressed accounts. So they made a contingent provisioning of over 2,000 odd crore rupees for some of the assets. They also said in the press release that 552 crore rupees of the same was on account of an airline company exposure which has been in news since last couple of days, and about 530 crore rupees was on account of stressed infrastructure conglomerate. So we all know these accounts, and other than that their margins were also subdued during the quarter at about 3.1%. Business growth as well, with advances slipping 1% on a sequential basis, and deposits as well coming off 2.2% on a QoQ basis. A very conservative approach being taken by the new management, and they've decided to front load all this stress so that from here on they can consolidate their balance sheet and move ahead with a stable set of earnings.
Absolutely, Shefali. I'm sure that we're going to speak about this a lot more. A lot of brokerages, in fact, have downgraded their ratings on the stock as well. So I'm sure it will be in focus today. But while you're with us, can you also talk about Kotak Mahindra Bank? The numbers are coming out today. I believe that the expectation is for a stable quarter.
Yes, absolutely. We are looking forward to net interest income figure of about 3,079 crore rupees. So that's on a standalone basis. That'll be a growth of about 24% on a YOY basis. And profit is also expected to inch up 24% to about 1,394 crore rupees. So no major pressure we are expecting on the asset quality. We are looking forward to gross NPA figure of about 2.1% and net NPA figure of about 0.7%. Credit cost, we are expecting somewhere in the range of about 70 to 80 basis points. Loan growth expected to be in excess of about 23%, way ahead of the systemic loan growth that we've been witnessing, and it will mainly be driven by corporate banking and some unsecured lending. So unsecured lending going up, we've seen that for some of the banks as well. Deposit growth, we are expecting around 18%. So we saw a good growth coming in for HDFC Bank as far as deposit growth is concerned, and even for Kotak, we are expecting the same. Margins are likely to expand marginally to about 4.4%, and we expect expect some moderation in the commercial vehicles and commercial equipment segment. So it was a strong 36% growth for them in the same segment in the third quarter. From that level, we expect it to taper off. Other than that, we expect strong traction to continue on the liability front, that is the deposits, and other income growth is also expected to come in at about 12% in the fourth quarter. So overall, steady set of earnings we are expecting. And the larger issue with going on with Kotak Mahindra Bank has been about the stake sale by the promoter, but that has been deferred by a couple of months. So any sort of management commentary coming in with regards to the same will also be keenly watched out for.
Absolutely. Thanks so much for that, Shefali. Well, we'll wait and see as to how the commentary comes in with regard to the promoter dilution of stake. And clearly, those are two stocks that you have to watch out for. But Mishika Parekh is joining us now to tell you about all of the other stocks in the news. Morning, Mishika. What's on your list today?
So there are lots of important results that we need to look at today, starting with Hero MotoCorp, which came in with an inline set of numbers. Their revenues were down 8% at 7,885 crores. Net profit is down 25% at 730 crores. And EBITDA is down 22% at 1,069 crores. Their margins stand at 13.6% versus 16% last year. And analysts expect the quarter one of FY20 to remain weak, but the management is hopeful for a better second half for FY20. Then a set of companies that came in with a weak set of numbers are BEPL, L&T Finance and RPG Life Sciences. And the list of companies that came in with inline results are HDFC AMC, Shanti Gears and Castrol. And these are the companies that came in with extremely strong set of numbers. Cholamandalam Investment and Finance, Indian Energy Exchange, Trent, Gallant Metal, LG Balakrishnan, Reliance Nippon and Orient Cement. Then we have Reliance Home Finance. So CARE Ratings downgraded Reliance Home Finance long-term debt program to default rating. Reliance Nippon is also in news. Reliance Mutual Fund has exposure of 535 crores and 1,083 crore rupees to long-term NCDs issued by Reliance Capital and Reliance Home Finance respectively. The management's plan to service all capital market and other loan obligations in a timely manner. Considering the adequate security held by Reliance Mutual Fund, the interests of investors should be fully protected. Sun Pharma clarifies that US FDA conducted an inspection in its Dadra plant from March 22nd to 29th and issued Form 483 with 11 observations. There is no material impact of news of US FDA finding quality issues with this plant. Max India is exploring new lines of businesses after divesting healthcare and health insurance. They're likely to enter businesses with adjacencies to current group businesses of life insurance, real estate, senior care and hospitality. Part of the divestment proceeds proposed will be offered to the public shareholders. When Garden Reach shipbuilders are awarded a contract for construction and delivery of 8 ASW Swallow watercraft valuing around 6,311 crore rupees under fixed price basis. The project is expected to be completed within 84 months from the date of signing of the contract. NHPC signed an MOU with the Indian Army to undertake construction of semi-underground bunkers and fully underground caverns at different locations in India. And lastly, we have Bank of Maharashtra. The board has approved fundraising of 4,000 crore rupees, out of which 3,000 crore is via issue to the government and 1,000 crores is via bonds. Also approved set-off of accumulated losses of 7,327 crore rupees against reserves.
Thanks so much for that, Mishika. Well, if you missed any one of them, you can look up the website bloombergquint.com. You'll find stocks and news, and you'll also find all you need to know. That will prepare you for everything that you need to know about morning trade. But let's talk about something else now. Music on the go has become the norm, and increasingly more and more people are happy paying for it. Spotify has reached 100 million paid subscribers, a first for any online music streaming service. And it says it's not done growing just yet. Take a look at its record rise. right, well, you'll find a lot of content just like that on the website bloombergquint.com. In fact, let me tell you about a couple of stories that you should consider reading. Phase 4, like I said, of the Lok Sabha polls was conducted yesterday, and it saw a voter turnout of a little over 60%. Reports suggested that Mumbai's voter turnout at just over 55% was better than that recorded in 2014, which stood around the 51% mark. Remember that 3 phases remain, and counting of the votes will take place on the 23rd of May, and the results will be announced on the same day. Now, Jet Airways, according to PTI, may find assistance from an unlikely, or at least an unexpected source. An employee consortium or 2 employees consortiums have proposed to take over the airline with at least 3,000 crore rupees expected from external investors to support their bid. That's according to 2 staff unions. The 2 associations representing pilots and engineers, Society for Welfare of Indian Pilots and Jet Aircraft Maintenance Engineers Welfare Association, have written to State Bank of India Chairman Rajneesh Kumar proposing that they would take over the airline and can bring in up to 7,000 crore rupees. All right, that's all you need to know going into trade today, but there's a lot more coming up. In fact, a lot of conversation to do with Yes Bank. So do stay tuned. This is Bloomberg Quint.